Let's bring in our next guest analyst. It's going to be Robin Cross from StoneX. Robin, thanks for being on the show. What do you got for us, brother?
Of course. Good morning, Scott. It's good to hear from you, bud. Well, first of all, before we get into it, let's get into some prices. March lumber is trading this morning, $393.80, down $7.10. We actually had 124 trades over there. That's quite a bit of volume for the first 21 minutes. May lumber's coming in at $419.30, down $8.40 with 57 trades over there. And I also got to mention the new lumber contract because it's going to be fully traded on May 15th, so I want to get the viewers kind of into the flow of that. The new truck contract, March, $498.50, up 50 cents, only 3 trades, but, got to mention it. May over there is trading $527.50, up $3 with only about a handful of trades. Scott, we had some breaking news in housing this morning. Housing starts and permits came out, so I'd like to give you those numbers. Housing starts came out down 4.5%. That's old business basically at 1.339 million, and building permits, the gauge of future business, came out, call it unchanged. It was up 0.1% at 1.309 million. Well, Scott, lumber futures market has literally been a hedger's delight. For the past, 24 days, we've saw massive premium and big discounts. Since the January 15th expiration, the market rallied for 11 straight days from a combination of, I would call it, oversold market condition, hedge fund short covering because we lost a massive amount of open interest, and major mill curtailments. I mentioned the last couple of weeks that we took about 1 billion board feet of production away, but it doesn't really kick in until the second quarter. So the 11-day rally, we rallied from 342 low, it looks like about $191 all the way up to 533.70. But like I was saying, the production cuts that were announced really don't kick in yet for another couple months. So there was not, it was kind of a false start, as I would call it. We lost enthusiasm. It totally waned at the higher prices. And then in true lumber futures fashion, the market quickly broke from the highs. We dropped for the last 12 straight days, almost literally straight down. As you know from being a trader, breaks are twice as fast as rallies. And we eliminated all the recent gains and even made a new low. We saw the market drop $143 from the 533 high to yesterday's new low of 390. And, it's really returning kind of to the oversold market conditions. As I've been saying for the last couple of weeks, I don't think it's wise to be short under 400 going into the building season. I know that, with inflation and interest rates and everything, it's not really a good environment for housing, but we're so undersupplied of home inventories. I think that that's going to keep a floor into this market. And, I really think that we're going to have a robust spring. I even heard, on a side note, a couple home builders I deal with, to kind of combat this high inflation and interest rates, they're actually, instead of lowering the prices of their, homes to be built, they're offering, people points off to give them a little discount. So I think that you're going to see a decent spring. But after that, good buddy, it's anybody's guess with this economy, especially with what's been going on in the big board and everything. I think that ultimately impacts lumber. So just be careful and, look to be a straight-up hedger. Buy big discounts and sell premium, and don't mess around in the middle.
Yeah, you're right. They are offering points. I mean, I thought that was out of the lexicon, and that was when I was a kid buying my first house. That was a big deal. You could buy points and make that mortgage a lot better, but now that's back in play, but it's not the banks as much as it is the people that are trying to sell the houses. You're absolutely right, because I've seen a few of those things here in Nashville. Do you think, though, that with the, like you said, interest rates and inflation, you could see lumber rally, but I think that the runaway price rises to the upside are probably going to be done for the short term here. What do you think?
Agreed. I totally agree with that. And, 1 billion feet of production curtailment is significant, but don't forget why they made those cuts to begin with, because the market was awful. I mean, that's really what it comes down to. So I do believe that you're limited to the floor, and I also believe that, the recent highs we saw are probably going to stick. I really don't think that we're going to take those out without additional curtailment news.
Right. You'll have to see some sort of rate cut or some big uptick in the economy. I agree with you. All right. Great stuff. Thank you very much. This is Robin Cross. He comes to us from StoneX in Chicago. We're going to go away. We're going to take a quick break, pay some bills. We're going to pay Janet's salary is what we're going to do. And we're going to come back and talk right after this.